Crypto market, particularly Bitcoin, has recently experienced significant outflows. According to a recent report from CoinShares, digital asset investment products worldwide saw net outflows of $500 million last week. These outflows predominantly stem from Grayscale's converted spot Bitcoin exchange-traded fund, though its impact seems to be diminishing, with daily outflows reducing progressively throughout the week. James Butterfield, head fallen researcher at CoinShares, highlights this trend, noting a decrease in the intensity of outflows. And while Grayscale's GBTC experienced a decrease in outflows, there's been a surge in capital moving into the newly established spot Bitcoin ETFs. And last week, these spot ETFs collectively attracted $1.8 billion in fresh capital, with BlackRock's IBIT and Fidelity's FBTC at the forefront, securing $744.7 million and since their debut on January 11. These fresh market entrants have amassed $5.8 billion in total inflows. This influx has effectively balanced out the $5 billion that flowed out of GBTC, culminating in a net positive inflow of $759.4 million into the crypto market funds. The impact of these outflows extends beyond Grayscale, with other altcoin-based funds also registering net outflows. Ethereum investment products, for instance, saw $39 million left, with smaller amounts also ready together, exiting Polkadot and Chainlink funds. And Solana was an exception in this trend, which witnessed inflows worth $3 million. Interestingly, blockchain equities continue to attract investments, with an additional $17 million inflow last week. The regional analysis further sheds light on these market movements. U.S.-based funds experienced the most significant net outflows, totaling $409 million, while Switzerland and Germany saw outflows of $60 million and $32 million, respectively. Brazil emerged as a notable exception, registering $10.3 million. Butterfield suggests that these outflows, particularly in the U.S., were likely prompted by the substantial outflows from Grayscale, totaling $5 billion, contributing to broader market uncertainties. Despite these market dynamics, Bitcoin has shown slight signs of recovery, regaining 3.4% of its value in the past 7 days after a recent dip below $39,000. Bitcoin trades above this mark at $42,074, though it has seen a modest 0.7% decrease over the past day. And what they all learned about commissioners. People took my distance. I mean, I'm auto shift, but I'm auto shift to people about Bitcoin systems and sitting investors, and there should be the analyst notes that February has historically been a bullish month for Bitcoin, particularly following a bearish January and a positive performance in the last 4 months of the previous year. Gel backs this up with CoinList data, which supports this observation, showing that in 2015 and 2016, when Bitcoin closed the last 4 months of the year in the desert of green, it followed up with a bearish January and a bullish February. And looks like Bitcoin continues the pattern we've been monitoring since September, 4 months in the green, 1 in the red. If Fez2 keeps repeating, February should be strong. Gel, January 1st, 23rd, 2024. That's given this pattern, Gel anticipates that February could again be a positive month for Bitcoin, potentially bringing significant gains